order to identify a demand zone, one of the key things we're going to be looking for, we start off always at the hard right edge. So we're going to start off at our current price on our chart. Now from that current price, we're going to look left and down until we find the origin of a strong rally in price. Now in my classes I talk a lot about this, that what we need to see for a strong rally is not just a bunch of green candles perhaps. Okay, we do have that, as a matter of fact, right in through this area. And you may be saying, well, why isn't this an area of demand? We had this downward movement, it paused, and it started moving up. And one of the first things I would recommend that you look at is the size of those candles. The size of the candle tells me a lot about how strong price might be in a particular area. Right here we can see that we have a relatively small candle that's starting off the bullish move, a little bit more momentum, and then finally we get the big candle just before we pause. That's not what I want to see for a demand zone. One of the odds enhancers that I use in order to identify the proper area of demand is going to be how we leave the level. We want to leave the levels with large green candles and or gaps. Now when we're dealing with Forex, obviously we don't have a whole lot of gaps because of the nature of currency trading. It's almost 24 hours a day. So when we're looking at this, we're going to be looking primarily for what we see here, the origin of an overall move and large candles leaving that area, kicking off that momentum. So once I've found that demand zone, what I will then do is draw out my proximal and distal lines and extend them forward. This is going to give me the area where I will buy or sell should prices return to that area of demand. So going out to a live chart, I've got the euro dollar here, and we can start on any time frame. I'll start with the daily chart. And to find my area of demand, I start at current price, 34.02, and work my way left and down for the origin of a strong move. Well, zooming in here a little bit more, there we go, we can see that my last move to the upside really just kind of began from here and moved to where we currently are. Okay, so if I'm looking for the origin of that move, there's a lot of areas where prices have paused and rallied, but the origin of the move is where I'm really going to be focusing. I want to look back at the beginning of this move and see, were there large candles coming out of that area? And I'll go ahead and put in a line across the bottom there. And let me just fix this for a moment. I want to be using somebody else's computer, so you never know what you're going to get. Go ahead and put those in a black and thick line. There we go. So there would be my origin of the last thrust to the upside. The top line, or proximal line, I'm going to put above the bodies of the basing candles. So my sideways motion that I saw before the bullish pressure was all the way through here. 1, 2, 3, 4, 5, 6, 7, 8, and the ninth candle we finally started moving to the upside. So I always look from current price back and down for the origin of the move and look to see what happened there. Okay? Now, Talon, yes, the question that Talon, you can put it into the room if you want to, all participants, but he was asking, is it just a return to the previous rally? And the answer is going to be yes. I haven't gotten there yet, but we will see that this is just a test of a prior area. Okay? But the first thing I look for is start at current price, look left and down until I find the origin of a strong move. And that was the origin of this overall move we've had to the upside. But the second thing I need to do is I need to make sure it's fresh. And before I get there, talking about fresh, I also want to talk about the line placement for our demand zones or supply zones. One of the things I want to see, obviously, once again, is start at current price, look left and down for the origin of a move, and I don't just arbitrarily draw the lines wherever I want. I have to have rules. I have to do rule-based trading. The more rule-based my trading is, the less emotion is going to be involved when I'm putting my money on the line. So in this case, oops, sorry, I just stepped on my microphone cord there for a moment. So in this case, what I'm going to be looking for is to draw my lines. I have two lines. The proximal line is the one that gets a little bit subjective, but shouldn't really be that subjective. The proximal line will be drawn across the top of the bodies of the basing candles. the distal line is going to be drawn below the low, or in this case I use the wicks, okay, because that happened to be the low. But if there were no wicks, I would just use the bottom of the bodies of the candles. So whatever the lowest low is, that's what I'm going to be drawing for my distal line in my area of demand. The proximal line, as I mentioned, is going to go across the top of the bodies of the basing candles. So going back to my example that I just had, that's why the lines were drawn exactly where they were. I draw across the bottom of the wicks, that was the low, and the top of the basing candles before we started to move to the upside. So this is my demand zone. Should prices return to that area, somewhere in that zone is where I would expect them to reverse and move upwards. So key things I'm focusing on here, number one, let me just go and put this in. Number one, oops. Start at current price. Number two, look left and down for the start of a strong move. So my overall move started way down here. That's why I started at that point. Mark the distal and proximal lines. Okay, and I have rules for that. As I mentioned, I'd use the low and the body of the basing candles. Okay, will this be the same buyers that made a rally in the first place? It could be, absolutely. And I'll explain that in just a few moments why this demand zone works. Okay. Now, I also want to make sure a couple things. Number one, with one of the odds enhancers, now, I want to make sure we have a strong move, so I need to look for large green candles. Okay, we want a strong move. We want a strong move because when we are forming an area of demand, okay, this is where's the drop base rally here? This is the drop, there's the base, and there's the rally. That's all. That's what we're looking at. We're looking at this particular move to the downside. Let's see, where's my tool? There it is. Drop, base, and obviously the rally right there. Okay? So that would be the demand zone. Now, this is not going to be a quality demand zone. I'll explain why in just a few moments. But the reason why we want to look for large green candles, this is why demand zones work. Demand zones work because if you imagine there was an institution with large buy orders, maybe they have a whole bunch of buy orders just sitting here. They want to buy in this price level, 129. Okay? There's a whole bunch of those orders. Remember, this is built up demand, lots of demand, but if there's no supply here, all these orders that are pending, are they going to be able to get completely filled? What do you think? If there's a lot of people wanting to buy in this area, but not many people wanting to sell, a lot of these orders might get filled, but the remainder of those orders are going to be left over. So as you guys are saying, no, they're not going to get filled. So some of them might, we can remove some of these out of the equation. But now, if we were to come back to that area, people who could not get filled here would likely try to buy when prices return to that zone. You have to realize that a lot of these big institutions, they're not concerned about chasing price. They're not concerned about missing out on a move. What they are concerned about is buying at a price that's too high, okay, or selling at a price that's too low. So they will be extremely patient, and they will wait for minutes, hours, days, even weeks until prices return back to an area where they can identify a high probability entry point. Okay, they want to get an average cost. I used to work in the hedge fund level, okay, or the hedge fund industry. And when I worked in the hedge fund industry, that's what we used to do. We used to look to try to get an average price for our securities. And if it took us some time, we would just work the order. We were patient and waited for prices to return to us until they could buy into those areas. Now, they will care for fresh levels, obviously, but they actually create the levels. The institutions themselves will be the ones creating these levels because of all that pent-up demand and no supply.